Crypto this weekend continued a really nasty downward slide. Jumping into Monday today, things are not looking great. I think anyone that's been following crypto has known that this bear market is going to continue for some time. In fact, many people thought there might be a pause in crypto trading sideways for some time until Fed raises rates once again, trying to burn through inflation. And as we've seen, crypto follows the S&P 500. Well, this weekend, things got a little bit nasty. And by a little bit, I mean a lot. Let's talk about what's going on. Let's dive into the market dynamics. Let's see what's causing it so you can make your own wise decisions. All right, friends, so the best way to dive into this news is really just to take a peek at what's going on here. Taking a look at CoinMarketCap, we can see that crypto as a whole is absolutely nosediving. We look at Bitcoin that's taken a 15% slump just over the past 24 hours, down to $23,000. Now, that's really, really scary. If it hits 21,000, things are going to get super nasty for crypto. And I'll talk about why in just a minute. But we're seeing this go down, and a lot of altcoins are also seeing, pretty much everything is seeing negative transactions going downward. Ethereum 24-hour slump of 17.5%. So pretty mind-boggling. And again, a lot of us knew that this was going to happen. Just scrolling through here, outside of stablecoins, nothing is looking good right now. So we've known this for some time. And one of the questions that we want to answer is, what's causing this most recent slump? I think we're going to stay in a bear market for quite some time. I think pretty much most prognosticators, didn't you like that I used the word prognosticators, are using this and looking just longer term. Things don't look good until we handle some of the issues in the larger worldwide economy, things like what's happening in Ukraine, what's happening in terms of just the financial stability and health of the U.S. financial ecosystem, especially with Fed raising rates and inflation. Man, things are not looking so great. So we know that. But let's dive into what happened over the weekend. And I saw this come in as soon as this came into my my Celsius application and my Twitter feed. I had a bunch of friends all blowing up my phone on this saying, "Wes, what do you think about this?" And while I was out completely of all of last week, sure glad I'm not out this week, so we can dive into some of the things that are happening. So this is coming in from Market Watch right here. Celsius sends shockwaves through the crypto industry after pausing withdrawals transfers amid extreme market conditions. So we know this, right? And we know what they said is, I'm just going to read the quote to you so you can kind of see it. We're taking this action today to put Celsius in a better position to honor over time its withdrawal obligations. So, there's a lot we got to say here. First of all, where do we really start with this? First, let me just come clear. I'm a huge Celsius fan. I continue to be a huge Celsius fan. All the way back to over a year ago, I put $100,000 of my own hard-earned Bitcoin into Celsius to see how it would grow. It's done well, at least in terms of the Bitcoin growth, and I really don't have a lot of negatives to say in terms of Celsius as a company facilitating users like me wanting to grow their crypto assets, especially those that don't trade the market, which I typically don't. I'm typically a long-term buyer, hodler. So I've liked it. I've done reviews into Celsius. I've covered their cybersecurity stances, and I'm always putting out my referral code, which is pretty awesome if you want to get into it. But one of the nice things about my relationship with Celsius is I'm still just a customer. They're not paying me. I'm not being shilled. And so when negatives happen, I'm going to cover them. And this is a huge negative. And it's one thing that we need to continuously be understanding when we hold and move our crypto assets out to someone else to hold and to be the custodians of. So why is Celsius doing this? Well, there's a lot of reasons they're doing it, but the main thing that it boils down to is they're concerned that if there is a run on Celsius and everyone is trying to get out their crypto before the market goes down even lower than it is, then Celsius is going to be in a world of trouble. See, a lot of this goes back to banks. And let me kind of explain what I mean. Banks are well known for taking your hard-earned money and lending it out. Now, while they have ratios of how much they can actually lend out, they have a lot of controls in place to make sure that there's not significant runs on banks. Think about it this way. Let's just make numbers up. Let's say a bank is lending out, $10 billion of their assets. that are they're holding that's my assets and others. They want to make sure that there's not such a run on the bank and so many people withdrawing those funds that they have an inability to pay back the money that they have loaned out, that they don't have access to. And Celsius is doing the very same thing. As much as they call themselves unbank yourself, as sort of their term, they're acting as a crypto bank in many ways. The funds that we store with them, they are then lending out, and then we take some amount of a commission gain from that on a weekly basis. Okay, that's great. But it's not great when we have extreme market dynamic conditions that are going down, not up. When that happens, not only are there margin calls on crypto that you're lending out, but also you're seeing Celsius take evasive action to protect their own insolvency to keep that from happening. Now that's nasty, right? Someone asked me just today, they said, so what do you think about their freezing of assets? I'm like, look, freezing like the swap program, for example, and earn, like I don't think they're actually freezing earn, but if those kinds of things, like I don't really care about, not a big deal to me. But where I draw the line, and I want you to hear me, Celsius, on this, is freezing my own assets and freezing the assets of those that are just like me that have put in our funds. Now, more important than that is you had better not lose my funds, Celsius. They had better not evaporate. That's where we're going to have real issues. But if you're freezing me from getting rid or from withdrawing my assets, that's the worst thing you can do. So let's hope you don't go worse than that is probably the best way to say it. Not good. But really, a lot of this comes back to things we've already known. Something I've said in every Celsius review, which is this: not your keys, not your crypto. See, old school battle-hardened crypto people like yours truly, who's been in crypto for over a decade. Isn't that crazy? We have seen huge slumps. We've seen losses of crypto that we don't own. I personally was involved in Mt. Gox. I even did a documentary on it. I understand what it's like to lose my own crypto. And so when you talk to the hardcore old school crypto folks, they always say, not your keys, not your crypto. I'm not putting any funds in with anybody else. And I've got my own cold wallets like a Ledger or a Trezor or something like that. And I am keeping that crypto under the mattress, so to speak. Now, that's not a bad thing. And when these things occur, this is where it's coming from. They have been burned. And so this is your first time and you've lost your crypto, or really I shouldn't say you've lost it. I should say this: you are unable, let me be really clear, you're unable to withdraw it out. Just understand, you have no recourse at the moment. You're just going to have to hold it there. You're going to have to wait it through. But this is why not your keys, not your crypto is as true today as it has ever been. One of the risks that you take by giving your crypto to Nexo, to crypto, to BlockFi, to anybody, is they are holding it, and it is subject to loss, and it is subject to your inability to withdraw it. As long as you can understand that, then you're gonna be okay. The people that are panicking are the ones that didn't fully understand that and are now really in a world of worry from it. Okay, I know that was a lot to say, but I had to get that out there because I'm a well-known Celsius influencer, and I wanted to cover all that. I don't like it any more than you do. I disagree with their decision, but if that's what they're going to have to do to keep themselves solvent, so be it. And you're going to have to make a decision after you're able to withdraw your funds is, are you going to leave your funds with Celsius or not? Maybe you're going to say, no, that was way too much. I want to earn some, maybe 50% of what I own, I'll give to them. The other 50% I won't. I don't know. I can't make your decision for you. I'm not your financial analyst. I'm just a YouTuber, right? So keep that in mind. Really going to have to weigh through those things. Okay, let's get back into the news a little bit because I think there's some other important things that are here. One of the things I wanted to cover is also in this news article is news around the actual lending holdings of Celsius. There's a bigger company that's out there, which is Nexo, and Nexo is trying to buy their holdings. I think that's pretty interesting. Right here is the actual LOI. This is called a letter of intent. If you don't know anything about me, know this. I am a startup entrepreneur. So one of the things that startups will sometimes have is as they're growing, a larger company will come in to try to buy you. My last company, Perch Security, was purchased. If you look online, you'll see it for $80 million. I can't disclose the actual numbers, but that's the public data. And one thing that you'll see is they send out these LOIs, these letter of intents. And so you're actually seeing Nexo's letter of intent to purchase, not purchasing Celsius. Let me be clear here, just their lending, the remaining qualified assets. So let's not not over analyze the word remaining, but we do know that Nexo is larger. They have more assets. And so they're attempting to acquire this. So here's the actual LOI. You can check this out. I'll put a link in the description. Not necessarily a reason to panic, but this LOI came out today. It's got 1 week for its livelihood. Otherwise it expires, and it just walks through how all of this is going to work. Now, do I think this is going to be successful? My opinion is probably not. What I know of Celsius is they're going to try to weather this storm. They're going to try to make it through it. I don't expect this to actually go through. I don't expect this LOI to be actually honored. We don't see in the LOI, of course, the price. I mean, everybody and everything has a price, but I wanted to share that as well. So this comes in from CNN. Bitcoin plunges below 24,000. We saw that, and the crypto meltdown claims another casualty. So what are they talking about? They're talking about Celsius once again, but they also mentioned some news around Binance, and this didn't help either. Binance is a colossal behemoth in the crypto world, and one of the things that they sent out that I want to show you this tweet right here. This comes from the CEO. So this happened earlier today when he said temporary pause with Bitcoin withdrawals. This is like right on the same timing as what was happening with Celsius. And so you're kind of looking at this and you're like, a stuck transaction? Like really really a stuck transaction? How does that make any sense? It doesn't make any sense. And so everyone's kind of like, stuck transaction. Sure, of course. Turns out, really nasty timing. It actually was a stuck transaction. Right here, I'll post a link for this as well in the description, but this is the entire root cause analysis of what happened. Sure enough, it was. But you talk about terrible timing. A behemoth like Binance freezing alongside what happened with Celsius, it's natural that the world is going to panic, and everyone's thinking, oh no, two of the largest players that are out there must know something we don't know. Everything's, completely liquidating. Get out now. It's only the big whales are protecting themselves. Well, in this case, Binance wasn't doing anything nasty. They actually did have a freeze, and I was shocked by that. So here it is right here. I realized I wasn't sharing it. So you can see this right here. This is actually the root cause analysis. Again, I'll put a link so you can get to this in the description. Now, here's where a lot of this gets scary. I've got two things left to close on for you today. First of all, one of the things we need to be aware of is the margin calls for MicroStrategy. So MicroStrategy, Michael Saylor is one of the most influential crypto, really Bitcoin maximalist that's out there. He truly believes in Bitcoin and only Bitcoin. He has been buying for quite some time. And one of the things that's a little scary is those margin calls come into play around $21,000. So in other words, what Saylor's been doing is he's been using his own crypto assets to be able to use as leverage to purchase more. Well, that all works as long as the house of cards doesn't come tumbling down. And where those numbers start tumbling down is around the 21,000 mark. So right now, if you go back and we take a peek, go back and look at this, Bitcoin is hovering at about 23,000 and not doing so well. So those margin calls are getting really eerily close. And if that happens, we could see some nastiness happen. So I want to cover a couple things around this article here. And I'm not trying to spread fear and doubt. I just want to kind of cover where we're actually at. So he says, now, as you can see, we've mentioned previously, we have quite a bit of uncollateralized Bitcoin. So we have 95,000 unencumbered Bitcoin. What Saylor means by that is, even if the market continues to go down below our margin call levels, he says, I have uncollateralized Bitcoin. In other words, I'm just holding actual Bitcoin in my own reserves that I've not lent it against, that I can then go inject into my loans to prevent margin calls. So that's a lot, right? 95, that's just run a calculator real quick. So that is that. At today's value at 23,000, so he has 95,000 times 23,000. I'm just doing quick numbers here. That's $2.1 billion. So Saylor still has $2 billion of unallocated funds in crypto and Bitcoin specifically that he has the ability to go handle and work through should those margin calls happen. So going back to the rest of the article here, a few more things. It says, so we have more, just finishing this up. So we have more that we could contribute in the case that we have a lot of downward volatility. But again, we're talking about 21,000 before we get to the point where that needs to happen. So, what's going to happen to the market in that point in time? I don't really know. It's 2 billion can still burn through pretty quickly. You look through what happened with Terra and its epic collapse last month. my gosh, this could still happen. So we are not out of the woods yet. And we're especially not out of the woods yet because most people think the nastiness in crypto still is going to continue because we haven't seen the Fed continue to finish raising rates and burning through inflation. So things are not looking good. But we'll see if it's $2 billion worth of not looking good or not for MicroStrategy. But if that happens, there's going to be some serious liquidation events. And a lot of crypto prognosticators are seeing Bitcoin could go as low as, in theory, $10,000 per Bitcoin. Now, I am not a financial strategist and I don't give you a whole bunch of that FUD. So I don't really know what's going to happen. I don't think anyone, let me just say it, I don't think I know. There's one thing I do know. I know that no one knows what's going to happen exactly. So be very careful and just remember, as much as not your keys, not your crypto is a rule of life in crypto, another rule is simply this: never invest more than you're willing to lose. I feel for people that have put in way too much, that have gone in way above what they should have. Over leveraged, that's the word I was looking for, and now they are feeling the burn. Please don't be that person. Understand that diversifying your investments is smart. Talk to financial advisors so you can make your own wise decisions, and never listen to YouTubers. Now, on a follow-up video, I'm probably going to talk about some nastiness that's going to inject into the crypto world around where I think we're going to see regulation come in. And I think this week's news, coupled with last month's news around Terra Luna, we're starting to see some real interest in where we're going to see regulators come in. And I'm going to cover that on my next video, but only if you'll hit like and subscribe. I just gave you a ton of info. I would love for you to do that. I'd love for you to hit like, love for you to hit subscribe. It really does go a really long way. All right, my friends, thank you so very much. Hang in there. We're going to make it through.